a weaker dollar, the currency's been appreciating.
That's a very important point, Vince. Let me just stay with that. And Jerry Bowyer, I want you to weigh in, because actually, because of the euro decline, and maybe the yen decline too, but the dollar's having a nice run. It's up 10%. Right, and the gold price, which was exploding in the fourth quarter, gold has really simmered down. It's holding steady at 1,100. So I say with the appreciating dollar and the steady gold, inflation expectations right now are rather muted, Jerry Bowyer. What does that mean for Fed policy?
I'd say hyperinflation expectations are muted. That I think that sort of the decline in those market indicators says, okay, maybe we're going to get 4 or 5% inflation, not 8 or 9% inflation. And the thing is, it takes a possible Eurozone currency collapse discussion to get the dollar to appreciate against the euro. I mean, that's not exactly filling the dollar with glory here. I mean, we're talking about, you know, is Greece going to drop out of the Eurozone and take on the drachma again? And what about Portugal? If it takes that kind of rhetoric to make the dollar look good, then the dollar's not so good.
Vince Reinhardt, what do you make of that? Vince, I think you've come around to this price rule idea. Maybe not 100%, but I know you look at the price rule. If you're sitting in the Fed now and you do see the dollar strengthening and you do see gold leveling off, what do you make of it? I mean, Treasury bond rates remain, you know, the 10 years at 370. That really hasn't moved. There's no clear market signal of impending higher inflation, Vince. How would the Fed read that?
So they would read it directly as a source of restraint on spending, because an appreciating currency lowers the competitiveness of the U.S. goods in the export model, in the export market. They'd also see it as a force of restraint on domestic inflation directly through import prices and indirectly through commodity prices. So it's a force of restraint. What I am comforted by that restraint is it rules out, or makes less likely, a big Fed mistake of having to respond to a pronounced depreciation in the currency. And
in fact, taking it a step further, Vince, because of these favorable market price conditions with gold muted and the dollar strengthening, will this delay the Fed's actions to shrink the balance sheet, drain cash, and raise the Fed funds rate target?
It makes their life easier. They don't
I mean, I think they should go to 1 or 2% right now, but they're not going to follow my advice. In their halls of discussion, will they delay action as a result of this?
This slows it up, no question about it.
All right, Jerry Bowyer.
So they stay lower longer. So it's actually, and by the way, don't forget the yield spread, Larry. I mean, that's not muted yet. That's true.
That's true.
That's a highly inflationary signal right now.
No, that's a very important point. The yield curve is a record upward, steeply upward sloping. Jerry Bowyer, one thing that does bother me, though, all hell may break out next year because you have higher tax rates on investment. The most successful economic activists and investors are going to face higher tax rates on capital gains and the rest because the Bush tax cuts are expiring, and the Medicare payroll tax may be applied, if not next year, at some point, if Obamacare goes through. Now, here's my question. Does this not reduce the investment demand for money?
Yes.
And does this not make the existing money supply even more inflationary as a result?
Yes. So the money that's already sort of out there but not moving around starts to move, and then the inflation picks up, and at that point it's too late for the Fed to do anything about it because they've already pumped the money into the economic system. You can't pump it back out. So, Larry, when I look down the track to next year, I see twisted metal and broken glass. I see a train wreck. I see tax rates going up. I see inflation rates going up at the same time and new regulations coming in. So we're going to get some growth this year. I don't deny that at all. But a lot of that growth is going to be borrowed from next year. I'm very concerned about next year.
Vince Reinhardt, what do you make of Jerry's analysis?
Look, I worry about more regulation. I worry about tax rates going up. I think we're on an unsustainable path for the fiscal balances, and the way politicians will fix it won't necessarily be good for long-term growth. In fact, it will probably be detrimental to it. There's plenty of reasons to worry. But the Fed, if it wants to, can reel back those excess reserves. They've got some time. Thus far, they've shown themselves willing to do so. They've expressed a plan. I'm a little more confident. I do worry about the other two appointments.
Well, if they have a plan,
I do worry about about politics.
About politics. What do you mean? Clarify that. I love it when you talk politics to me, Vince Reinhardt. Tell me what's bothering you about politics, and then I'll get Jerry's last word.
So a couple things. One is Janet Yellen is a little more dovish than the median member already. There are 2 more appointments to come. They're going to be more dovish still. The way the Fed is going to be tightening monetary policy by changing the deposit rate is exclusively a Board of Governors decision. That is a group appointed in the majority by the White House.
Jerry Bowyer, on politics, does Janet Yellen have a history of community activism?
Oh, yeah.
Low interest, unaffordable mortgages, Community Reinvestment Act. Walk me through that, because I know that's on your mind.
2 years ago, when guys like you and I were pointing to the Community Reinvestment Act as one of the causes for this huge migration of capital into mortgages that aren't really sustainable, Janet Yellen was one of the people who came out of the woodwork, writing papers, giving speech, saying Community Reinvestment Act is best thing since sliced bread. We need more of it. So at exactly the time that Chris Dodd wants to give more regulatory power to the Fed, at exactly that time the Obama administration is going to load up the Fed board with people who have a consumer activist, trial lawyer, government-directed capital mindset. This is not good for free market economics.
That's rough stuff, Vince Reinhardt. Now I got to give you the last word.
I think elections matter. Janet Yellen is the best of the set of names before the White House. We should be thankful that it's a smart dove, not just a dove.
You know,
next election matters too, though.
I don't feel all that thankful. I don't know. I'm sort of betwixt and between. Because,
so it could be worse, Larry. Remember that.
All right. I understand that could be worse. And again, I think Ms. Yellen's a fine person. She's a fine economist. But once again, I'll say, if you have the wrong money model, I mean, I think free market prices for inflation-sensitive commodities in the dollar, I just believe you'll never shake me from this, Vince. Those are the single best indicators of future inflation and the best guides for Fed policy. And I see them moving away from that.
How many people on the Fed board believe that right now, Larry?
No one. Zippo.
There is not a single person on that board who believes what Adam Smith through Friedrich Hayek and Milton Friedman in between believe, what mainstream economists, I don't mean political economists, but I mean mainstream, what they believe about the way the market works.
The days of Wayne Angel and Manley Johnson and Robert Heller and Paul Volcker and even the early Alan Greenspan, those days are over. We are in the fine-tuning mode. And Vince is saying that Ms. Yellen is a better fine-tuner than your run-of-the-mill average conventional economist. I will have to leave it there, gentlemen. Thank you ever so much. Jerry Bowyer and Vince Reinhardt. Coming up, a consumer comeback. Yes, that's right. More optimism from me, at least in the short run. We're talking better balance sheets. We're talking much better retail sales today. We even had strong business sales as well. So Kellyanne Conway and Allison Dean will discuss all this when we return. I think 2010 is going to be a good year, but I think Jerry Bowyer's warning about 2011 and 2012, now that's something we all have to think about. Meanwhile, you're watching CNBC. We are first in business worldwide.
You're watching the Kudlow Report on CNBC, first in business.